Is the U.S. headed for a recession? It's the top question on many Americans' minds.
18,000 layoffs at Amazon, 11,000 at Meta, Facebook, 10,000 at Microsoft.
Inflation represents the bigger threat overall to markets and the economy.
We're at the beginning of the beginning, okay? For all of us that lived through 2000, this was 4 years of sheer hell and a grind. Now we have $30 trillion that we have to work through the economy, a recession we have to overcome, a war we need to end, and people all of a sudden assume that 2 or 3 rate hikes and 5 or 6 months of headlines are enough. It's going to take 3 years probably of the slow, meticulous, running off of money, not reintroducing new money. That may mean the bottom doesn't happen for another 18 months. So I think we're in for a lot of choppy market action. I don't understand why anybody would give up their liquidity in this moment right now. Why would you? Why would I give up $100 million of cash in my bank account? I would not do that right now. The thing that you have to do before you talk about what is happening now, I think it's probably useful to go back, and you have to really start at the end of the great financial crisis. And the reason is there was a bunch of people coming out of the GFC who confused what the US government and some European governments were doing. At the time, there was the risk of a huge financial contagion. And so the US stepped in and the Federal Reserve started to use their balance sheet to buy toxic assets, right? And the ECB did that, and I think Japan did that as well. Anyways, a bunch of banks did it. A bunch of governments did it. And then there was this body of pseudoscientific economists who coined this thing called modern monetary theory, which basically said, hey, you can keep printing money and introducing it into the economy to smooth things out and to actually drive long-term growth. And it turns out that a bunch of government officials fell for it. And if you fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about 35 odd trillion dollars of money into the economy that should have never been there. So the thing to remember is we have not necessarily just been obfuscating true supply demand in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system. So one of the things that we have to realize is that all of that money somehow needs to get destroyed in some way, shape, or form if the true economic equilibrium is meant to be found. What is true supply? What is true demand in the absence of government sloshing money around, trying to prop up things that should not be propped up, or buying votes, or all the grifts that these folks have engaged in the last decade and a half have to get undone. So that's the backdrop. So if you think about taking $30 trillion out of the global economy, you're talking about almost, I think it's 85 trillion is the world GDP. So it's almost half of an entire year's worth of global GDP. It's going to take 3 years probably of the slow, meticulous, running off of money, not reintroducing new money. So it seems like we're at the beginning of something that's going to be long and drawn out. And that's separate from whether we're in a recession or not. That's just the bear market that we're in, right? And so you have to look at asset prices today as a microcosm of a much larger trend that has to be about fake money pushing asset prices up, and now taking all that fake money out and finding out what the real price of something is. And I just don't think that takes 6 months. So for all the people that were, fingers crossed, hoping that this would be the end of it, Fed raises 75, we're done with this, they're going to raise 75 more. I just think that's not how it's probably going to be. It's going to take, 24, 36 months. That may mean the bottom doesn't happen for another 18 months. So I think we're in for a lot of choppy market action. I think we have to also be sensitive to the fact that the Fed operates on a certain class of data, and that data in the 21st century is pretty pathetic. Nick, you can probably find this, but there was an article, I think it was in the New York Times, that really walked through how CPI is calculated. And it's a bunch of people that work for the government that walk around with iPads, building relationships with local businesses in all these random places all around the country, and asking them to, chit chat for 15 minutes and do these surveys. Now, you would have thought that in 2023 or 2022, what the government would have said to, Visa, MasterCard, American Express, all the payment rails, the banks and Stripe is, send me a feed in the following structured way so that I can actually have an absolute precise sense of inflation, because inflation really only occurs when a good or a service trades hands for money, right? And you calculate what did that thing trade at the day before and what does it trade for today. So you could get an absolute precise sense of it. Instead, we do this random sampling thing. If you read this article, your takeaway will be, oh my God, this is very rickety, and it drives an enormous hammer that we use to try to manage the economy. That's the first thing. I think you need to buckle your seatbelt, because the next 3, 4, 5 months of CPI will probably be very, very bad. 7, 8, 9%. Why? There are a handful of components that have gotten completely run away. Number one, the biggest one is rent. And so rent works on a 3-month lag. We're going to reintroduce what the true owner's equivalent rent is into CPI. So we can already forecast that CPI going up. Oil is at $105 a barrel. Russia is basically trying to break the back of Europe by now messing with their nat gas supplies. The German energy minister yesterday said that if that happens, it could be a contagion equivalent to Lehman Brothers with respect to energy. When you play all of these things out, what you have is, unfortunately, rampant runaway costs that really have no mechanism to get back in check in the absence of some real governmental changes. Our policy on this Ukraine-Russia war, how we intend to sort of work or cooperate or fight with China, all of these things have to get solved. So in the absence of that, prices are going to continue to go up. And so what does the Fed do? How does it throw away what little credibility it has left when there's 8 and 9% inflation prints and saying, we think we're done for right now? You can't do that. So they will overcorrect, because there's just going to be so much pressure for them to act. All roads, I think, lead to lower equity prices. And I think what David said astutely is, we've seen the first wave, but now it has to touch all these other areas. For example, we have gotten totally drunk on debt as a country. One of the most obvious places where we've been serving alcohol far too late into the night is in the financing of all these private equity leverage buyouts.
Dangerous.
These are sketchy companies that are sort of like, teetering on insolvency at times, where private equity comes in, levers up the balance sheet with debt. They price it right to the edge of what's legally allowed or what's financeable, and then they go do it. But that's all assuming the economy continues to grow. And so if all of a sudden you have some recessionary forces or prices go up and earnings don't, you'll have, a contagion in the debt markets. You could have a contagion in the commodity market. So we're dealing with some really tough boundary conditions.
I mean,
real estate.
Most Americans have most of their net worth tied up in real estate.
Yeah.
And if we see a 30% correction in real estate, it could be a real problem, particularly with rising interest rates, inability to refinance.
We're at the beginning of something that just fundamentally has to take some amount of time to work its way through the system. And so I don't understand why anybody would give up their liquidity in this moment right now. Why would you? Why would I give up $100 million of cash in my bank account? I would not do that right now.